All right, so American Express just dropped their earnings. I'm going to put them up in chat. They dropped second quarter EPS of 289, beat the 281 estimates. Sales of 15.05 billion, missed the 15.48 billion estimates. So yeah, we do have that now for Amex. I'll put the numbers up on screen so you can see them. It is Friday. We decided to start our stream a little bit later today. I'll put those numbers up on chat. Second quarter total volumes for this came in pretty high as well. Where is let's get that rid of. Sorry, I'm pulling Moo up right now. Team, bear with me here, guys. There we go. Got this pulled up here too. All right, so I'm taking a look at Tesla. Tesla is dipping down pretty heavily over the last couple minutes. We also had a really green, profitable day yesterday in everything. Even though like we kind of avoided the big drops, but here's the market right now. I'm gonna put some music up as well here, team. So bear with me. And again, I'm gonna put these. There's the Amex numbers right here. There's American Express. And then Carvana, man. Carvana giving a lot of these gains back here. You guys got to let me know whether you think it'll continue to hit this crazy run that it's been on for Carvana. If you can hear the music, you should be able to. I haven't even pulled Discord up. I got to pull Discord out. I know I'm starting the stream a little bit later. Sorry, I had to work on this video. All right, so American Express still sees full year EPS of 11 to 11.40 and revenue growth of 15%. We're going to put all these numbers up on screen so you can see them. But they did just drop their numbers here. Their symbol is AXP. AXP. Again, they are reacting negatively to this, even though they had mixed results. They beat on EPS, missed on sales, neutral guidance. They backed their full year guidance provided in January. So neutral guidance for American Express. You can see the SPY in the market is generally up a little bit in pre-market, but down yesterday. But we kind of fought back and kind of pulled back a lot, gave back some of the losses that we took yesterday. So that's good to see. All right, so yeah, we also did pretty well. We're pretty close to getting funded, man. Again, the goal was to get funded this week, and we're pretty close to it. Just to show you guys kind of where we're at. And again, we're very close. We need $850 in profit today. Here is my main account progress. If you guys want to see it, we're doing pretty well. Again, we got to hit 53K in profit. And again, I told you guys, like, once I really start trying on these funded account programs, like I to be honest, what I've done a lot with this account is I've traded it off stream. Which is kind of what I need to do, because again, like the problem I run into is this. The problem I run into is like I will start trading, and then by the time I really start to get going trading, one of my mistakes is that I wouldn't trade early. Like I would only trade after the bell just because I was streaming it. And I wouldn't, by the time I actually started day trading these combines, I was so burnt out and tired that my mental game wasn't right. What I did with these accounts is I started to focus on trading a lot in pre-market. To be honest, I started trading a lot of these combines in pre-market. Again, you can kind of see with the account right now, I need roughly $850. So you can kind of see my actual accuracy here. Best day percentage of total profit. What? Okay, good. Best day cannot be greater than 50%. Okay, dope. All right, so yeah, we'll try to make that swing for today. But again, you can kind of see we are currently at 52,159. We got to hit 53. Our best day was about a little bit less than 900. Worst day was about 630. So our average winning day is a little bit lower than our average losing day, but our best winning day is higher than our worst day. And again, you can kind of see my profit graph here. Again, you can kind of see my profit graph here. We are running about 86% accuracy on this combine. And we got a couple other ones that we're working with as well that we're actually pretty close to. Let me take a look at these other ones, but we're getting pretty close is the point. So Doug Straight. So again, so I have one of my mods. His name is Douglas Straight. You don't look like him. So who are you, bro? You don't look like Douglas. I'm gonna have to reach out to Douglas. Hey, yeah, I'll figure it out. It's all good. If you're the same Douglas, my bad. Yeah, Carvana, guys. Hey, let's see what Carvana does here. American Express dropped their numbers. They came in pretty neutral here, but they're not really reacting the best. Yeah, we'll see if we hit it today. I don't want to push too hard because it is Friday, and I understand, like, Fridays are kind of sketch, you know. We do have a pretty good day, and we're actually pretty close to getting funded in, like, a bunch of different ones, man. Followed you forever. Yeah, I feel you, man. I'm not saying you haven't. I agree. I'm not saying you're not supportive. What I'm saying is, like, I got a mod named Douglas, and you're not him, but his name is Douglas Straight. And so I guess what I'm asking, are you my mod with just a different profile picture, or are you somebody completely different with the exact same name as my mod? You know, I always assumed you were my mod because I thought the Bomb Dia thing came from my mod, but again, I don't freaking know. Let me find Douglas. Hold on. Maybe you're not him. Maybe you're a different one. I don't know. Maybe you're just a different guy. I don't know. You gotta see who I'm following. Michael Burry, bro. I watched The Big Short for the first time in like a year plus yesterday, man. Okay, actually, never mind. You're a different guy. His name is Eric Douglas. You are Douglas Straight. Sorry, bro. You're okay, man. I didn't mean. Sorry. Yeah, you're good. All good. Yeah, you're good. Yeah, no, all good, man. Yeah, this is just Doug. That's right. Sorry, man. I got two Dougs, man. I got it mixed up, man. It's all good, bro. Sorry, I call everybody bro as well. You know, I call my wife bro. I call my 14-year-old daughter bro. You know. There we go. Any big weekend plans? Oh, honestly, man, I got to be honest here. Okay. My in-laws, I have lived the last freaking month with my in-laws, man. The last month straight with my in-laws, dude. We I went on vacation and my father-in-law was there. Right? So we spent a week in Florida and my father-in-law was there. And my stepmother-in-law. And then we left Florida and came home, and my son was sick, so we didn't have any in-laws here for like a week once we came home from Florida, but my son was sick the whole time. He had like 104 fever. It was rough, and so super stressful. If any of my parents out there know, like when your kid is sick, especially that sick, it is incredibly stressful. So he ran like 104 fever for like a week, was just a viral infection, and went away after a week. He's fine now. And then as soon as that was done, we left and drove to Michigan. It was like a multi-day drive, incredibly stressful. We get there, and then we live in this little bitty house, sharing one bathroom with my mother-in-law and my aunt-in-law, you know? And we're sharing one bathroom on one little bitty floor with 7 people, you know? And then we stayed there for like 2.5 weeks, and then we drove home. And literally, we got here, and the very next day or two, my father-in-law comes back and stays at my house for like a week with my stepmom-in-law. Man, dude, it's just been in-laws. And listen, they're great. I love my in-laws. All right, I really do. They're great. They're really chill in-laws for the most part. Some of them. But he left yesterday, and now I just feel like doing nothing. I don't feel like doing anything. I'm probably just gonna lay around and do absolutely nothing this weekend. And for good reason. I've been around my in-laws for like a month plus straight. I'm tired, you know. Oh, man. Yeah. And my wife doesn't understand because, like, she's just with her parents, you know? So, like, and they're a lot more involved than, like, my parents. No offense. My dad's great, you know. My mom's great, too. But they're just a lot more involved than my parents. I see my dad maybe like once a year, like maybe twice a year if something bad happens or whatever, you know. I see my mom a little bit more, but certainly less often. And yeah, I got to get acquired to that. Just after hearing that, I've decided to do nothing this weekend. Hey, man, good luck. Hope everyone makes tons of money today. Good luck. Yeah, we're going to try to get funded on Top Step today. We're very close. We got less than $900 left in profit to hit. And so we're very close. My stomach feels better though, man. I really am feeling better with my stomach, dude. Honestly, I'm upset that my stomach hurt over the last few days, but it really did pinpoint what was going on. Okay, so just to put it into perspective, I'm going to drop these earnings reports here. We're going to make a Twitter post detailing everything that went on. Every earnings report that dropped this morning had came in better than expected, except for Regions Bank. Everyone did better than expected except for Regions Bank. All right, so yeah, all the earnings that dropped this morning came in better than expected, except for Regions Bank, and that includes American Express, SLB, AutoNation, Comerica, Huntington Bank, Roper, a bunch of other ones. But yeah, those are the biggest ones. They're still not really big. They're just not. Yeah, Regions Bank is RF. Again, we got Meta earnings next week. Amazon, Ford, McDonald's. What other earnings do we have? Google, Microsoft next week. Whew, a lot of big ones. Snapchat. AXP. What is it? Comerica is the other one. I'm trying to look at what other ones we got. We had AXP, SLB, AutoNation, AM, CMA. All right. SLB, AN, CMA. And put this up on Twitter. Give your boy a follow on Twitter. We're also going to report. Give your boy a follow on Twitter. You can kind of see a breakdown and everything that happened there. All right, let me catch back up in the chat. I feel very lucky now. I am at my in-laws' house now. Hey, good luck. Got $1,000 worth of Tesla yesterday. I don't know, man. Tesla dipped yesterday, didn't it? So, I'm typically a dip buyer. I'm usually one that likes buying stuff on a dip. Tesla's a little bit, I'm holding Tesla, but whether yesterday was a good dip buy or not, I really don't know. But let me know what you guys think. Do you think the Nasdaq will recover from yesterday's losses? I'm not sure. Again, I've got the system set up on this funded account program to where I'm almost funded. And again, the goal is very simple. And if we don't hit it today, that's okay. Again, the goal is very simple, right? So again, on Top Step, I'm almost funded. What I do is very simple. I just build up a cushion. Once I have that cushion, I take larger risks. Right, so once I build that cushion up, I just take larger risks after that. It's pretty simple. And that's what we do. We build up a cushion, we wait. And once we have that cushion built up, then we raise our size, we take larger risks, and we try to build up that last profit. And so what I'll try to do today is I'll try to build up a cushion of like $300, $200 to $300. I'll take very quick short-term trades, try to scalp, try to get some good momentum, try to build up a cushion of $200 to $300. If it turns out that I lose $200 or $300, then I'm kind of done. Like, I'm done trading for the day. I will reset the next week and then come back and try to get funded next week. But we'll see if we can. We're very close. And again, if anybody wants to take the Top Step Combine with me, it's still $49 to be in the Combine. I've got multiple different ones, to be honest. So, I've got a bunch of different Combine accounts, and I think that's the way to do it. Right now, it's $49. So, you can buy 3 of them for $150, get 3 shots. Odds are stacked in your favor in that regard to actually get funded. And then once you're funded, there's a 90% split, and you get to keep your first 10K. So, pretty useful. Pretty useful. What's your Twitter and you think Siri will pull a GameStop? I really don't know. What's your thoughts on Carvana? I think Carvana has been absolutely nuts lately, man. I think Carvana has been crazy. I know it's pulling back a little bit now, but like Carvana's been nuts. Honestly, what freaking earnings whisper did to their site's UI is terrible, man. Why would you change it, bro? Like, it's so hard to maneuver there. Oh, wait, I might not have monetized the stream, did I? Yeah, I did. Okay, good. I know I'm a little bit late. I started the stream a little bit late. Hey, thank you for the follow, guys. I appreciate it. Why is Tesla still down? I mean, again, we don't know what anything's going to do. I don't know what Tesla's going to do. I don't know what it's going to do long term, short term, anything like that. The shorter term you look at it, the less anybody knows what it's going to do, right? So like every red day asking people why it's down, it doesn't always have a reason. I'm not criticizing you for asking. I'm just saying it doesn't always have a reason. Like there's not always a big news catalyst pushing it down. In fact, I think Tesla is really just moving with the market. I think the whole market's down yesterday, you know. Like I went to my eye doctor and like what happens a lot is like, and I've stopped telling people what I do for this specific reason. Like I don't really tell people what I do anymore because it's just kind of turned around and, you know, there's a couple things that happen when I'm like, yeah, I got a YouTube channel. Number one, they either think I'm like homeless or like they either think I'm unemployed and I'm just pretending, or they actually look it up and they realize it's a decent sized channel and then they think I'm like a stock guru. And so they're always like, hey, but yeah, my eye doctor even mentioned how bad the market was yesterday, but she's cool. But like market was red yesterday. A lot of stuff dropped. I'm not sure. Oh, I'm not sure, bro. Yeah, GameStop lasted a long time, you know, specifically regarding Carvana. I don't know how long this one will last. Nobody really knows. It's just about when momentum starts to dry. And again, I don't know when that's going to be or not. So the winner of the $1.28 billion lottery gets $434 million roughly after tax. It's still a good deal though, you know, like, okay, so if you ever win the lottery, which is nobody here, and just if you remember the lottery, remember me telling you this, okay, and you know, throw a little bit my way. But anyways, if you ever do win the lottery, there's a couple things you have to remember. Number one, always take the lump sum. Do not be dumb. Do not take the monthly payments. The lottery is hoping you're dumb enough to take the monthly payment option. They are truly hoping you are dumb enough to take the monthly payment option. It is the dumb move. It is a dumb decision, not arguable at all. The monthly payment is dumb. Okay, and I'm going to explain exactly why it's dumb right now if you ever win the lottery, which is probably nobody here, so I'm probably just talking, but that's all right. The reason it's dumb is because, just to put it into perspective, right, the S&P over the last 20 years has 4x'd, basically 3 to 4x'd, right? So it's gone up 4 times what it was 20 years ago. And so by taking the monthly option, all right, what you're basically allowing the lottery to do is you're allowing the lottery to take the money that they don't have to pay you and 4x their money over the next 20 years while they're still paying you, much less. They're paying you 25% of what they, of what it would ultimately be worth, as they can profit from it. As well as, like, if you ever win the lottery, the lump sum is less, but you can take that and just throw it into bonds, throw it into the S&P 500, and in 10 or 15 years, you're going to have noticeably more. So if you ever win the lottery, never take the lump sum. Or no, you always take the lump sum. I'm sorry. You never take the monthly payments. You always take the lump sum. And then again, if you do win, what I would do is I would take the lump sum. I'd put 3/4 of it in diversified investments. So I'd buy real estate with it. I'd buy gold with it. I'd buy, a broad market ETF like the S&P 500, NASDAQ, whatever you want to do. Dow, it doesn't matter. And then I would just take the previous, the last quarter, and just kind of live life with it and just do whatever I want. And I'd still never run out of money. But yeah, that's what you do. Do not take the monthly payments. Yeah, you're getting screwed in taxes regardless. But again, if you take the monthly payments, you're getting screwed in a lot of different ways. Mostly because, number one, there's no guarantee you're going to live for the next 20 years, right? So there's no guarantee of that, right? There's no guarantee. And so they are hoping you take the monthly payment, because then the odds are stacked in their favor even more. You just never take the monthly payment. Hey, what's up, Chris? Grave plots, check them out. I'm sure you'll be surprised at the return for buying grave plots and then reselling them on the market. Explain it to me a little bit. Listen, I'm an investor. I was watching The Big Short yesterday, and one of the parallels between Michael Burry and how I try to trade is that I look for value wherever it's found. Like I bought Target a couple days ago on a swing trade, and people freaked out. I buy Disney and swing trade that over and over again every year. People freak out. And so I don't care what the story is on anything. I'm just looking for objective value. I'll find value wherever it's found. And that was something that was said in The Big Short. Big Short, just a great movie. It's what inspired me to become a trader in the first place. Take that lump sum. If I had to buy stocks with the lump sum, I'd probably buy Apple, Amazon, Google, and then I'd probably get out of tech. So I'd probably buy Apple, Amazon, Google, Microsoft. I'd buy Apple, Amazon, Google, Microsoft, those four. And then I would probably buy like Walmart, maybe a little bit of Target, but Walmart, Target, Home Depot. And then I would pivot. I would try to buy a little bit of each sector and just diversify if I had to. But really, in that regard, it would just make more sense to buy the S&P 500 or whatever, or gold. Gold's pretty good store value too, but gold is a little bit more volatile. But Burry's a super weird dude. Do you do this as your only source of income? No, I mean, I do a lot of different things for income. I'm a real estate agent. I also, I do some freelance programming with front end web development. Mostly not really back end, but like front end means like design, and so like JavaScript programming, React Native programming. But point is, I have multiple different income streams that I do. I do trade as well, and this certainly makes money also. Yeah, you just find value where it is, man. You can't get wrapped up in politics, morality, like whatever it is. Like I don't care about any of that stuff. I just want to make money. So I'm looking for cheap objective value. I'm looking for something that's down a lot, that has a low PE ratio, which means that it's bringing in good money relative to the price it's currently sitting at. And so I'll look for stocks that I think are emotional reactions to the downside, and I'll buy up those stocks because I think they hold value. even if they're, whatever. Yeah, I have my real estate license. No, Richard. I'd also keep an eye on companies that are deploying blockchain tech, but not crypto. Several industries are using blockchain to make a more secure business model. Which ones? Name some, man. John, as beat up as AT&T and Verizon are, why do they have low PE? Because they're cheap. They're beat up. Beat up companies typically have low PE ratios because they're beat up. Some of them do. I guess that's not universal. Wouldn't that indicate they're still profitable? I believe they're still profitable, Chris. Like, again, I don't think AT&T is not profitable. Of course, AT&T makes money. Verizon, of course, makes money, and they're cheap right now. It's kind of like Lululemon, right? It's the same. Again, I think those companies are fine right now. All right. I don't think they're bad right now. Again, Lululemon makes tons of money. My wife shops at them often. My daughter loves Lululemon, right? So like they shop at them often, but that's not the point. It's not about what they did over the last year. A lot of people, like the people who like Lululemon, they take what I said long term, and I'll make a long term like worry. It's not even a prediction. I just think it's too vulnerable for me to put money in, and I think AT&T and Verizon are the same thing. The only way I would buy AT&T and Verizon is a short-term trade, like over like a year or less. I think the more you zoom out, the less healthy those companies look, because I think it's going to be worse for them as time goes on, unless they find other ways to diversify their business. And I think that's possible as well. Again, I'm not saying they're going to fail. I just think they're a little bit too vulnerable for me for becoming obsolete, is what I think the risk is long term, over a long period of time. And again, when I'm looking to invest money in something, I want a sure thing, and I just don't think AT&T and Verizon are necessarily sure things. Now, of course, they make lots of money; they're down big, but I don't necessarily think they're sure things. And again, that's okay. Again, I'm not saying they're going to fail. I don't know what they're going to do. I think they have a chance to, though. Somebody tried to use the capital gain tax as a reason not to invest long term. Well, you could use that logic for anything. I could say, hey, don't buy real estate, capital gains. Hey, don't buy stocks, capital gains. Hey, don't buy gold, capital gains tax. Yeah, all good, Chris, man. That's good. Again, I just don't trust them long term, man. Again, same thing with Lululemon, right? Lululemon, money making machine right now, bro. I promise. I understand how strong Lululemon is right now versus most people, because I live with two people who love Lululemon. They shop at them all the time. My wife literally bought me a pair of shorts yesterday at Lululemon, and I like the shorts. Okay, I'm not hating. I might be wearing them right now. No, yeah, I am wearing them right now. But that's not my worry for Lululemon. My worry for Lululemon is like when I invest in things, I need sure things. And Lululemon is not that. Lululemon is fashion. Fashion can change. And especially over a long period of time. It might be the hot thing right now. But again, look at Hollister. Look at Abercrombie and Fitch. Look at American Eagle. A lot of those are nothing right now. They're terrible companies because, again, fashions change. And that's the risk. Same thing with AT&T and Verizon, even though I think they might be a little bit safer than Lululemon as well. But it depends on whether Lululemon becomes like a staple brand, but which I don't think they are yet. But I know AT&T and Verizon have been around for a long time. I just think technology evolves, and I think I don't know what that landscape is going to look like in 10 years. And I think it's risky to buy and hold those companies because I think those companies are some of the most obvious of companies that you could have like potential obsolescence in their technology. Like you might not need their technology anymore, not as much. And let me rephrase that. You'll still need a phone and a phone carrier, but I think their margins are going to decrease unless they find other ways, is the better way to put it. What about Nike, John? Well, Nike's been around for a century. You know what I mean? So it's different. So Nike has been around for, a long time. Maybe not a century. I'll have to look up Nike's life. I know Nike got big in the 80s. So at the very least, Nike's been big for 40 years. Lululemon is not that. it's just not that. As well as like it's a different business. Nike is shoes, and Nike shoes are a lot of the time based around basketball, and basketball is still huge. So strength in Nike is strength in basketball as long as they can stay on top. But Lululemon is not that. Lululemon's a pretty relatively new store. At least it first gained like notoriety over the last few years. And with that, I think it's up a lot. And I just think there's risks. Again, it's just not a sure thing that I want to put money in. Yeah, Air was good. I did like Air. $1964. Okay, got you. Yeah, so 60 years. Well, Vans is owned by a larger company, believe it or not. I think it's owned by I can't remember. I want to say Vans is owned by Lee Clothing. But I'm not sure who owns Vans. The VF Corporation. Okay, so yeah, VF owns North Face, JanSport, and One, Eastpak, and Ultra. So okay, so yeah, they own Lee as well. So VF Corp completed the separation of VF Jeanswear organization into an independently publicly traded company. The new company named Contour Brands includes Wrangler, so Jeep Wrangler, Lee Clothing, which is what I originally said, Rockin' Republic, VF, and a bunch of other ones. So yeah, they're owned by Vans. As much as they'll say they're for the little guy, they're owned by a big guy. Yeah. Crocs, man. The story behind Crocs is hilarious, though, man. So the story behind Crocs is like in the movie Idiocracy. And I think somebody told me this a few days ago, but I already knew this as well because I love the movie Idiocracy. Hilarious movie. But the movie Idiocracy, when they first came out, they wanted to find. It's a movie about the future and about how dumb the future will be. That's basically the movie, and the basic premise of the movie is that dumb people have a bunch of kids and smart people don't, right? And so over time, that's going to dumb down society to where the less intelligent people are having more kids than the smart people, and then over time that's going to dumb down to society to where in the future everybody's going to be dumb, is basically the premise of the movie Idiocracy. So when they were filming this movie, they wanted to find a shoe brand that looked dumb. They wanted to find a shoe brand that looked like they looked dumb. And so at the time when this movie came out, which was like 10 or 15 years ago, Crocs was an up and coming, like a very small startup company. And they chose Crocs specifically for their shoes in Idiocracy because they could never imagine in a million years that people would be dumb enough to wear these shoes as normal like shoes, right? They never thought in a million years that people would be dumb enough to do it. Sure enough, and so when you watch the movie Idiocracy, they're all wearing Crocs in the future because they're supposed to be dumb, right? And so they're all wearing Crocs. Fast forward 15 years, Crocs is a huge, one of the largest shoe companies in the world. Everybody's wearing them. And so I don't know if it was I don't know if it predicted it correctly or if it was self-fulfilling there, but it's a funny story. Never liked Vans. I was more of like an Airwalk guy. Like I skateboarded. I was more of like an Airwalk. I had Airwalks. I had Etnies. I had a lot of Etnies. I had DCs. Some. How about Macy's? I don't trust Macy's at all. I think Macy's is another company that's probably on the way out, but maybe not. I'm not sure. Again, with Macy's, I really don't know. I just think I think it's really up in the air whether they're going to succeed long term or not. I think it's probably not long term, but who knows when that actual failure will happen for something like Macy's, because I think mail order shipping just kind of kills their business. I just don't think people are going to use them. Well, the reason people wear them is because they're durable. It doesn't matter if they get dirty, and you can slap them on your feet pretty quickly. That's why people wear Crocs. My son wears Crocs. And the reason he wears them is because he doesn't have to wear socks with them. They still protect his feet from the outside. It doesn't matter if they get dirty. You can wash them off very easily, so they're not going to stain. And so ultimately, they're just durable shoes that you can slap on really quickly, and they protect your feet. You know, that's why Crocs succeed. Flip-flops, your feet are still exposed. Is there any reason Bitcoin dumped? The last I saw, Bitcoin was up, right? Bitcoin back down. Bitcoin's mostly been in the same spot. I don't know why it dumped yesterday. It dumped at 9 a.m. yesterday morning. I'm not sure why. Yeah, Crocs are now overpriced, though. Like, you go buy a pair of Crocs, it's like $70. Yeah, they're not bad. I'm not going to say they're comfortable, but they're not, like, super uncomfortable. Yeah, they breathe well, too, so your feet don't get hot. There's a lot of reasons people wear them, honestly. That's just about the movie Idiocracy. I kind of like wearing them. I have a pair I wear pretty, like, during the winter, I have some furry ones that have, like a layer of fabric on the inside. They're comfortable. Those are pretty comfortable, to be honest. Yeah. All right, so yesterday, Tesla's earnings call. We can look at Tesla's earnings call and quote Elon here. He said, quote, "If I may, look, the short-term variances in gross margin and profitability were really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. I'd recommend looking at ARK Invest. I think their analysis is very good. It's the best, and generally, FinTwit or the smart finance people on Twitter follow their accounts. They're great. So that's in my opinion where you'll get the best info." He said, quote, "I strongly believe Tesla is a big long-term investment, and don't sweat when things go up and down. In fact, if the market panics, buy. If the market is a little too exuberant, sell at the time. But just generally, like, I feel I'm confident we'll deliver over long term, but can't control short term. So the autonomy is really where it's at." So yeah, basically what he's saying is that he's confident in their long-term view. Short-term, we might get price fluctuations, but that's pretty normal regardless of any stock or anything like that. Yeah, he did plug Kathy a little bit. That's all right. Kathy's all right. Again, I disagree with some of her trades. I agree with other ones. I wear some Nike slides. I wear. Honestly, people hate on these. I wear Sperry's a lot. Like, I wear Sperry's, like, boat shoes a lot. I can't boat. I get seasick, but, like, they're comfortable, man, and I can slide them on. And, like, I wear Sperry's a lot. People hate on them. They say they're like snooty shoes. I don't care. You know. What was the Fed Now news? Okay, so the Federal Reserve officially launches the new Fed Now instant payment service. It launched it yesterday. System is expected to improve the flow of money through the U.S. 35 early adopters, including JP Morgan and Wells Fargo, signed up. 16 other institutions. They said, quote, "We will continue to educate our members on the two systems and benefits they offer consumers and businesses," according to ABA president. But yeah, so they did launch the Fed now. Interesting. Yeah, I've seen Hey Dudes. So the market's been in a little channel currently. What do you think about yesterday's drop, John? I feel like it happened because of rebalance index thing, because tech down. Yeah, I think they say the rebalancing thing is going to be effective Monday, but I'm not 100% sure there, to be honest. Anything else you guys think is good today? Again, we got Carvana up here. We're looking at Carvana. Again, Carvana's still at 46. Let me pull my quant tower up. Again, man, I'd really love to hit. Again, the goal right now, guys, on quant tower on top step is to build up a cushion of like $200 to $300. If I can do that, then I can take that next swing, which is the goal. If I could do that, I could take the next swing, and again, that is the goal. If I end up losing $200 or $300, I just need to trade small to where, you know, to where I'm gonna be able to make that, you know. I trade small where if I lose $200 or $300, I'm just gonna sit out, try to build up another cushion tomorrow. If I do, then I can take another swing and just kind of keep doing that until I get funded. All right, so here's the micro NASDAQ here. Nothing like NVIDIA for building a quick cash or losing it, but you're smart enough, man. Yeah, I'm a little skeptical of NVIDIA. I had a lot of people ask me about NVIDIA, and I just don't trust it. It's up way too much right now. I was talking to my eye doctor about this. It's just up so much. There's risk. Why are you asking what somebody's Twitter is here? Again, Amex earnings just dropped. Do you know of a trade tracking software that auto imports futures? Trading View, maybe? Hey, what's up, Shepard? Yeah, about one little contract of the regular E-mini here. I just want to see if it continues this trend. I do see this longer term trend here. You can see it's actually pretty obvious. You know, but it doesn't mean it's going to continue in it. But like, this is the trend I'm looking at right now. That looks like a pretty obvious trend in the S&P 500, but again, one contract only. It is Friday, so y'all be careful. Fridays typically have generally lower volatility, but the SPY pulling back to the 200 EMA. It's a pretty big level. Tesla and Carvana, I think they're all pulling back some. The question is, do we bounce after these pullbacks for Carvana and Tesla? I don't know. Well, yeah, I need one contract until I scale up my size. So one contract to build up a cushion of $200 or $300. If not, we just cut it and try again with micros if we need to. All right, we'll see what everything else does. June options expiration. What's up, Sam? Yeah, again, what I do, and again, you can kind of see my graph here. Let me show you the graph on this account so far. Yeah, you'll notice a very common trend with this account. It's very simple. I build up a cushion first, and then once I have that cushion, I swing larger. That's all I do, right? Here is the profit graph so far. During the combine, we're running about a 3.31 win-loss ratio, so we are winning in 3.31 out of 1 trades. Nice. You see gross profit, we're up about 2,800. Net, we're up about 2,200 in profit. So we need about $800 or $900 left. We'll try to get funded, and we're pretty close. Again, the goal, what we typically do, like yesterday, for instance, right? Like yesterday in this account, what you'll see me do very often is I'll build up a cushion. If I build up a cushion like this, you can see I built up a cushion of $190. We swing. If we lose on that one, we're only down much less. We're down less than $200, and then we can take another swing. And if we lose on that one, we close it down. But we made money on this one, wrote it up, and then kind of sat out for the rest of the day. Yesterday we had a 2-to-1 win-loss ratio. But again, the easiest way to do this is like the safest is you build up a profit cushion first, right? Whether you want to use micros or what, is your choice. But like I build up a cushion first. If we have that cushion, then we swing a little bit larger once we have profit on the day. Like once we're already green on the day, then we'll take a little bit larger risk after that. If we're not green on the day, we take very small risks, one contract to the regular or micros. And doing that. Yeah, you're right, Sam, but still. The point is, win-loss ratio is about 3.1 to 1. I hear some rule kicked in yesterday that prevents new shorts being opened on Tesla for 48 hours since the stock dropped 10% a day. I'm not sure. The short sale restriction, it's not a new rule. SSR is just sort of short sale restriction. Yeah, if you're in the 150, you need at least one contract of the E-mini. The only thing I will say is be careful with the NASDAQ and anything. Right, the NASDAQ, you trade a regular NASDAQ contract, that thing can go against you incredibly fast. Y'all just be careful. Yeah, this is my P&L on this specific combine. And again, I'm in a bunch of different ones, but like you can look over the next week since we did this one. Or we can look just this month. There we go. So this month, that's our graph. No, I'm just saying we because I don't know. It's just a habit. I am up. You know. All right, we're probably going to get ready to cut this futures trade. The market's really flat right now, and something that we need to just be careful with. I don't want to give back today, and so we're going to try to build up a cushion today. If we can't, all right, we just cut this trade, so we just got out. So we did lose a little bit today. We are down about $35, which is fine. I'm okay with that. Again, we'll wait until we have a little bit better edge and, wait for some other better stuff. But again, goal is to build up a cushion of a couple $100, and we'll see if we do it. Again, if you want to be in the combine with me, it's $49 right now. You can check out the link in the description. Yeah, I say that because I'm married. Yeah, I guess we could use that excuse. So I'm looking at what this guy Ramit Sethi said. He said, quote, "You buy a house thinking it's a good investment. Value increases $500K. Now what? When does it actually turn into money for you? Do you sell and move to another house? Other houses are expensive now. Sell and move cities? Maybe, but your friends and family are here. Now what?" I'll explain the answer to this. The answer to this is simple. The answer to this is that the purpose of buying a home is to keep up with inflation long term. The obvious point is if you don't buy a home, you lose $500K. That is the difference. And so if you don't buy a home and say the value of the hypothetical home would be $500,000 more, then you essentially lose $500K. Your money is worth $500K less, and you're not keeping up with inflation. The entire purpose of all investments, guys, and again, to understand this is something that's really important for traders to understand in general about investing in anything: gold, silver, houses, real estate, the S&P 500, the NASDAQ, Apple, Disney, Amazon, whatever you want to invest in, right? The single most important purpose of that investment is to keep up with inflation long term. Because if you don't, inflation will decrease your income, decrease your money over time. Inflation grows every year, without question. And so if you do not hedge against inflation by investing into different things, over a 20-year period, you're going to lose a lot of money. It's one of the reasons the whole thing about, put money into your 401k and just basically save all your money until you're 60. And then you can live good when you're an old man. I don't necessarily, and no offense to my 60-year-old. 60-year-old's actually kind of young, so don't take it as an attack. All right. But what I don't agree with is telling people to save all their money and then live good when they're 60 plus. I disagree. I think if you want to live good now, you got to take risks. If you want to live good when you're young, you have to take risks. You have to start businesses. You have to do something. That or get a good job, of course. But, I don't know. I think a lot of the ideology of a lot of these investing guys like Dave Ramsey is, hey, just save your money. Just save your money. When you're 60, you can enjoy it. I disagree. I think you got to save your money to take risks. So when you're young, you save up your money, save up 20, 30, 40K, spend that on a business, try to start your own business with that. Maybe it succeeds, maybe it fails. You do it 6 times. If you're good enough at it, the likelihood that one of those businesses sticks and that you'll have long-term big income over time is much higher. But they do say like the average failure statistics is 1 out of 6 businesses succeeds. And again, I could probably attest to that. I think that's probably pretty accurate. Before I started beginner trading, I had started a number of different things that failed. And that's just kind of part of it. One of the best things that you can do, one of the best characteristics that you can have as an entrepreneur is resiliency. If you keep pushing despite failures, that's usually the ones that do well. And it's hard to, but right, for sure. Dead cat bounce, maybe. With Tesla's unique business model, the only way their stock prices going to drop is Elon. Now Tesla makes over half their revenue each year from one source. Yeah. 60 is the youth of older age. Yeah, I can see that. Do you prefer the E-mini or the NASDAQ? I prefer the E-mini personally. I just think the E-mini, it still moves a lot, but it's less volatile than the NASDAQ. You know, if I buy 5 contracts at the micro on the NASDAQ, that can go against me hundreds of dollars very quickly. As opposed to like the regular E-mini, I could buy 1 contract of the regular, and it's still going to go against me quick, but it's going to be less quick than the NASDAQ. So the NASDAQ is a little bit too volatile for my personal preference, but it is subjective. How long do you think it takes for a business to become successful? Well, that's not one answer. There's going to be a lot of different answers there. It depends on the sector. Depends on what type of business it is. Something like a YouTube channel can pop off in like 6 months, 2 months, 1 month. Something like a website can pop off in a year or less. Something like a physical product, that generally takes a little bit longer. Something like a firm, that takes even longer. And so it depends on the sector of the business. All right, so there's the 8 a.m. scrum. We got a little bounce up in the markets, but there's the 8 a.m. scrum. Carvana still sitting at 46s. We're watching it. Hey, you as well, Beach Bum. Thanks, man. I've heard 1 in 9 and 1 in 10. I heard it was 1 in 6. I don't know what my own personal experience is there. I've started a lot of successful businesses. Like I had a used book business that it took maybe 3 or 4 months to really build up. And once 3 or 4 months hit, I was making 4, 5, 6K a month from it. Now I think that eventually that market became saturated, but I made enough money on it to be okay, and to start other businesses, intern, beginner trading, and a lot of other things. So. Buy an RV, problem solved. The reason I can't get behind an RV is because generally they're going to depreciate heavier. Like I don't want to buy something, like cars are already depreciating assets. Like by the time you buy, like a new car is one of the worst investments you could ever make. It really is. Unless the only way you should be buying a brand new car, especially in terms of like financing it, is if you have the money if you have FU money, you can buy a new car, right? If you got so much money, it doesn't matter, and that you just want to live good, fine, buy a new car. Or if you're writing the car off for business purposes. If you're not writing the car off, buying a new car, if you don't have it really, 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 really together financially, is one of the worst investments you'll ever make in your life. When you drive that thing off the lot, it's going to depreciate 30% at least in value. More than that as time goes on, and so it's just a bad investment. You could buy a used car with like 20,000, 30, 40, 50,000 miles on it and pay noticeably less money. Yeah, unless it's for business purposes as a write-off. I'm saying if it's not a write-off tax-wise, and you don't have FU money, don't buy a new car. Worst investment. Like, again, a lot of times like financiers and car salesmen will talk you into it like it's a good decision. It's not. It's a hugely depreciating asset that is going to be, and by the time you actually pay that thing off, it's going to be worth noticeably less than you paid for it. What if it makes me feel better? Hey, do you, man? What industry would you say it's the easiest to become successful? I don't know if there's any easy ways. It depends on the person. What I will say is like, do what you know. Find what you're passionate about and monetize that however you can. Like that's what you're going to have the greatest chance of succeeding is you find what you're passionate about and what you truly enjoy, and then you monetize that in some way. Like if you don't know what to do, that's what you do. You figure out what you like, what you know, and you monetize that as best you can. That's the easiest way to succeed, I think, is you figure out what you like doing, what you have a true understanding of in terms of markets, and you buy that. Or not buy that, you monetize that. That's what you do. Dude, my buy would have worked here on the S&P. Wish I was passionate about selling dirt. Oh, well, you're like if you're selling dirt, you're like Roy on The Office. Roy left Pam. Pam left Roy, and then Roy started like a gravel business or a dirt business, and he ended up being. I mean, listen, you do what you know. You figure out what you know, and then you monetize that however you can. Yeah, the problem with an RV is that they're number one is that they're technically an automobile, right? So they're depreciating. They're going to depreciate over time. RVs depreciate more than trailers because an RV has a freaking motor strapped to it. That motor goes out, there goes your RV. As well as like when you look at style changes, right? Technology evolves very quickly. And so what was cool and hot and looked really good today is not going to be what's cool and hot and what looks really good in five years from now. And so you might buy a RV for $100K. That $100,000 RV is going to be a lot less cool in 5 years, which means that it's going to depreciate a lot over a 5-year period of time. You know what I mean? So in that regard, I can't get behind buying an RV personally. I think I would just rent one or whatever. I don't know about Johnson & Johnson. Yeah, RVs are hard to sell too. Yeah, for sure, Chris. DWAC, you never know when this thing will run to the hundreds again. Yeah. But you never know if it'll run to hundreds again is the real statement. You don't know if it will, not when. You know what I mean? I've seen so many penny stocks hyped up, and then bag holders that are stuck in it long term are talking about how it's the greatest stock in the world, and typically it's just incredibly risky, and it's an obscure stock that has a very low probability of success. And maybe it succeeds, but it's high risk, high reward, and a lot of people are just justifying buying it because they're stuck in it long term from big up their positions. It's not huge volume. This is just the 8 a.m. scrum coming in. Here's the SPY bouncing. That looks good. Once I sell my house, we're going to buy a small used RV and travel around. But yeah, that's fine. I mean, I'm not against that. I'm just talking about in like investing terms. You know, I don't think buying an RV is the right move investing wise. But if you want to travel, I mean, do what you want to do. You know, it shouldn't stop you. It's a small enough investment where it's not going to be the end of the world. And if it makes you happy and it does something that you need it to do, if it has utility for your life, then do it. All right, SPY's starting to pop up a little bit though. Yeah, you can make it a rental. It depends on what you need. It's all about leverage, right? So you can sell your house, but only sell it if you need to buy something else. You know? Tesla, yeah. So Carvana on the right. You see the SPY trying to move back up a little bit. I'm in one contract of the E-mini. Is the over about $40? Flat on the day now. I'd like to see it go up a little bit more here too. All right, we're gonna go ahead and cut it. Actually, I just want to be green on the day. So that trade brings us green on the day. So we're nicely green. Maybe it keeps going up. We can see the trend that we're still in that I drew earlier, and you can see we are following that trend right here on the S&P 500 E-mini. All right, so we got a little bit of a cushion. I'd like a little bit more. Tesla is starting to bounce back up, though. Look at Tesla here. Tesla is starting to pop up a little bit now. Tesla rip. It's at almost 267s now, too. Yeah, but in terms of like consistency there, V, he said my blank is worth 5K now. I'm not going to say what it is, but in terms of consistency, it's not something that like you're going to have a lot of obscure things that appreciate big over time, but the question is not whether they did appreciate. The question is whether those type of things are consistently predictable. And I don't think many of that sector is going to be consistently predictable. And again, I'm in Texas, like, you know, I've got a lot of those, you know what I mean? But not those specifically, but you know, that's my point. But the question is whether they'd be consistently predictable, and I don't think they would be. It's kind of like Pokemon cards, right? Like Pokemon cards, you know, like they've appreciated, but whether they'll be consistently predictable in terms of appreciation over the next 20 years is another story, and I'm not sure. It's a big question mark there. Again, I really just don't know. We've thought about renting, but we have enough equity in this old house. We should probably cash out and lay low for a bit, ready to pounce on another fixer-upper. The funds from the sale of this house could propel me forward more, I think. 100%, man. You know, you sell it if you know, you can. It depends on what you think the real estate market's going to do. Interest rates are high right now, and so if you have cash, you might be able to find some good deals. You know, you might be able to find some good deals if you have cash right now. And so, but again, it's a subjective thing. Whenever you say maybe it goes up more and you sell, 80% of the time it does go up. Well, it's not about whether it's going to go up or not. It's about locking profit in. Yeah, I mean, I'm probably the king of that, where I'm like, yeah, I'm going to let it work more. 2 seconds later, I sell. I made fun of myself yesterday for that. Because again, like originally I'd love to let it work, but I can't have that mindset yet. I think the only time I can have that mindset where I can let it work more, and the reason I rethought that is because I need to have a cushion first. If I can build a cushion first, then I can take a little bit more time and let it work a little bit more, since I have that cushion. Until I have that cushion, I think I need to take profit when I have it. And so that's the reason I changed my mind there and I took that trade. Again, if I was up $200 or $300 on the day, then I could let the E-mini work a little bit more and try to ride it up more. But again, I don't have that luxury yet. I have to build up a cushion first. I found some solid deals for duplexes. How do you do it with your swings? With my swing trades, man, again, I'm going to use Target as a really good example of this. Like, for instance, I look for stocks. Like, again, here's the thing, right? A lot of the time people will critique my swing trades and they'll say, oh, well, you're only making money because the market's so hot right now. Like, the market's flying up right now. And again, maybe to a certain extent, that's true. But the stocks that I'm buying, if you look at the stocks that I'm actually buying, I'm typically not buying stocks that are up big or that are going to have a super heavy weight or influence on the S&P. Like, I bought Target, a couple days ago. You know, I bought Target down here a couple days ago when it was at 129s. It's at 134s, 135s right now. And so again, the stocks that I'm buying are not necessarily stocks that are up huge on the year. Like, they're not the hottest stocks in the market that are ripping up like you know what I mean? So like, I bought this thing down here because it was so extended on the downside. The PE ratio is low, and I thought I could buy a decent dip and ride it back and make some money on it. We can look at another example of this in like Walgreens, which is another swing that I took that I think I cashed out on yesterday. Again, another great example of this. I'm buying stocks that I think are beat up. Like, this is not one of the big hot stocks leading the market. Walgreens is actually down a ton since December of 22. So since last December, you can see Walgreens is at a pretty big red trend, a pretty big downward negative trend. And again, I bought this up. I can't remember where I bought it up, but I bought it up somewhere down here and wrote it up and sold. In fact, I might be able to put the trade on the chart here. Let me see if I can. Hold on one second, guys. Okay, yeah. You can kind of see I bought Walgreens down here at 28.70s. It ripped up to 30.20s and I sold. So again, here's another example of like a short-term swing trade that I'll take. I bought it up down here sold it way up here. And then Walgreens does not move very much. But again, I'm buying weak stocks that I think have a high probability of bouncing short term. And so I buy stocks that I think are down a lot. So again, this one had dropped for 3 big days in a row. And you can see immediately after I noticed it had dropped for 3 big days in a row, I bought the dip. Pfizer was another one, PFE. Again, you can see a very common pattern here with my swing trades. I bought this one, and this one is not one of the hot stocks that is just ripping up huge. You know, here's 2022, here's 2023 for Pfizer. It's been down a lot. And again, since I bought it, we've had a really nice rebound. And so you'll notice some obvious consistency in the patterns and the type of charts that I trade for my swing trades. Again, I am looking for stuff that are down big, medium term. And then I'm buying the dip and I'm just sitting on it. But they're all stocks that I think are going to be fine long term. Like Walgreens, going to be fine long term. One of the biggest retail pharmacies in the world. Pfizer, big pharmaceutical company, probably going to be fine. Target, regardless of the political stuff going on right now, probably going to be fine. All of them have relatively low PE ratios as well. So like relative to the earnings that they're bringing in, the money that they're bringing in, the chart being so low looks like a opportunity. Again, I watched The Big Short yesterday, so I'm going to repeat a Big Short quote. Michael Burry famously said, "I look for value wherever value can be found." And again, that's what I try to mirror in my trading strategy. And I disagree with Burry in a lot of ways. I think he overpredicts crashes. But I look for value wherever value can be found as well. And again, it doesn't matter what people are criticizing, what people are mad at, what anything is. I'm buying up cheap value if I can find it. And it works really well. My accuracy on my swing trades, I would say, is at least 80%. At least. And again, we're green on the year in Mumu. We're green on the year in Toss right now. So it's mostly shares. It's not options. Options are too restrictive. I have enough buying power on both of these accounts to where I don't need time decay or restrictions to stop me from making money on the trades. I could just sit in them. Yeah, I think somebody else called out Pfizer, but and again, I'm on Mumu right now. Speaking of Mumu is a really great platform. I use it a lot on my swing trading analyzation. So like when I analyze these swing trades, I use Mumu a ton. And the reason I use Mumu is because it's just really useful for identifying stuff. Like here, if we look at this. So here's Lulu, for instance. You can see the PE ratio on LUVU is about 750, but I can put up any stock right here and check the PE ratio. So if I want to check like Target, for instance, right, I can pull up Target. And we can look to see what all of these things are, what their valuations are. I can look at everything here and just see a good detail of what's going on. I can also put up Market Hotspot and see like a heat map of what's going on in the market. So it really tells me a lot of market trading is a kind of like a flow state that you get into when you see the market every day. And when you see the market every day, you can kind of understand a little bit more nuance about what's going on. And so you can look at this heat map, which will show you all the big sectors, what's moving, what's red, what's green. I can go to the best performing sectors and look at that as well to see what's up big recently. I can use this thing here and see the hot stocks in the market. I can look at pre-market hot stocks. I can look at after hours, IPOs, more and more stuff here that I can just look at and read in the markets here. You can kind of see this stock as well. Again, if I go to let me find it. Sorry. If I go to their Explore section, I can go to their Paperfolio section. But if I go to Explore, I can look at futures, dividend payouts right here. I can look at announcements, IPOs, broker ratings, shareholder change. I can build my own screener, which is incredibly, complex and useful and really, really useful. I can search for PE ratios right here and figure out the stocks that actually have low PE ratios, which is, again, a really big edge of what I do. You can look at their Paperfolio section. So I can look at what everybody else is making money on the day, on the month, and I can see what they're buying, what they're trading, what they're holding, what their portfolio looks like. And then I can even follow these traders to get a good grasp of like when they're buying stuff and copy them a little bit if I want to. Their news source is also one of the best in the game. You can see the headlines here. I can see the news on my watch list, and I can also see an economic calendar. And we got a lot of stuff coming out economic wise over the next couple months, or over the next couple weeks, and you can kind of see that here. And so just generally really, really useful, as well as like their options. They have free unusual option activity. So if I go to their options, I get free unusual activity here, which is typically a monthly subscription. And so just really, really useful. And to add to all of that, there's zero commission in stock trades, and they're open the entire pre-market session. And so the reason I switched from TOS to Mumu is because I can actually trade at like when I get up in the morning and start the live stream, I can actually trade. And again, there's 0 commission stock trades. Plus, if you open up an account, they are a sponsor of my video. So if you open up an account, you get 5 free stocks for depositing at least $100, 15 free stocks for depositing at least 1,000. And again, I got like Palantir and some other ones. And then if you deposit over 5K, you get the previous 15 plus a free share of Google or Tesla. And so you can imagine like the percentage gain just from depositing in this account. It's really useful. And if you want to check them out, I'll post this link. I'll also pin this to the top of the chat if you want to see it. Yeah, I mean, a lot of traders do that. Who said that? Justin. So he said, you're smart here. I seem to go for hyped up stocks. A lot of traders get the wrong impression. Like a lot of new traders, for instance, they will, a lot of new traders will get it wrong in that like they'll see a big gap up, and they'll see a big gap up and they'll say, oh, it must be strong. It's gapping up 30%. And so they'll try to buy the really extended on the upside stocks that are really hyped up. And I disagree with that. I think I'm looking for opportunity, and I guess it is a subjective thing, but I'm looking for opportunity when I see something down big that I would otherwise consider healthy. Like Walgreens down a lot. Walgreens is probably fine. They're one of the biggest retail pharmacies in the country. Same thing with Target, same thing with a lot of these companies. And typically one thing you'll notice is that when I do take these trades, a lot of people are mad at me. A lot of people criticize me because they're getting involved with politics or emotion or morality or whatever it is. And I don't care about any of that stuff. I'm just buying what I think is valuable. And again, my accuracy rate on the swing trade speaks for itself here because, again, a lot of the time people just do not like the swing trades I get into. And that's a really interesting thing because, for instance, Snapchat, I was buying Snapchat at $8. And people called me an idiot. They called me all these names for buying Snapchat at $8. Less than a year later, Snapchat is up to $13 right now. So Snapchat is up a lot. It's up almost, 100%. It's probably up 70, 80% over the last year. And again, the same people that attacked me for buying Snapchat are just kind of silent crickets now because, again, they understand that I was right. And I think there's a lot of ego floating around in the market, and you got to ignore that. And you got to just stick to what you like and what, you got to go with your own convictions, I think, a lot in trading, because no matter what you do, somebody's going to disagree. Yeah, the best examples of that philosophy were those that bought the BP dip after the spill. Yeah, there's a lot of examples. I mean, my thumbnails, who cares? 75. I just stick with the same thumbnails. I usually already have thumbnails on them, so I just go with the same thumbnails I've already created. Whoever said I should have stayed in that trade was right, though. Look at this rip up on the S&P. I should have held it. I would be up big right now, but that's okay. Yeah, that's with all the brokers, crypto. I mean, we could sit around, wait for me to do a sponsored plug and then critique the broker, but like that's with any broker that's going to give you free shares. They're going to make sure you actually use them first, and that's a reasonable expectation. No, I'm not going to charge money for anything, CJ. One of my big philosophies here is that I just don't want to charge for any of my content. Like I want all of my content to always be free. I don't want to sell a course. I don't want to sell a service myself. In terms of like educational content, like I don't want to do any of that stuff. Like I'll teach people for free here, but I don't want to like sell a course. That's something that like I always want to be a free resource and community. So I'm not going to, and I don't really have the time to do private individual classes or anything like that. So I just try to teach people, what works for me. Again, I can't guarantee it's going to work for you guys. I just try to teach people what works for me here while I'm live, and hopefully you guys appreciate it. Uncomfortable question. How much do you make trading versus sponsors? I make so much more money running this YouTube channel than I ever do trading. And that's never something I'm scared to admit. Again, I'll be completely honest about it. It doesn't matter too much to me. But again, I make way more money running this community than I do trading, and again, that's just the truth. But I don't think people can really get mad at me for that. I think it's kind of like if somebody starts a mechanic forum or like a mechanic community, like a mechanic starts a mechanic forum, and like they get like beginner trading gets like 200,000-300,000 hits a month. So say that mechanic forum that they founded starts to get a lot of views. Pretty quickly, they're going to make more from the forum than they ever would being a mechanic, and that's okay because they're providing value. And again, what I try to do is just give people free content. I don't have any paywalls behind my content. And again, at this point, I've backed myself into a corner where if I ever try to charge for content, I would get so much heat for it that like I would never do it, you know? Because again, my thing is like I just want to be a free resource for traders. And again, we're really not even like a super active day trader. Like we day trade, but I'm better at swing trading for sure. And yeah. Is today triple witching day? I don't think so. I think I looked it up. Quad witching day is last month. I don't think it's this month. I might be wrong though. Oh wow. Yeah, I wonder if that's like a competing thing with Robinhood pawn. All right, guys. So again, next FOMC meeting is going to be pretty soon. I'm looking at the last meeting now. I wonder if there's a way I can get a little bit better. There's got to be a way to get a little bit better. Let me find their YouTube channel. All right, so the market's still popping up a little bit. I'm still looking at Pfizer here. Again, we're also looking at Carvana. We can look at Tesla here making some moves. SPY is actually up a lot, and we dropped a lot yesterday, so. So the last FOMC was on FOMC was on June 14th. Nothing bounces on Friday. I just hope we get some good price action. Hey, thanks, Chris. I appreciate it, man. We tried, bro. All right, let's see what else we got. I try to be as honest as I can about how I really feel, and I know that kind of ruffles some feathers sometimes, but that's okay. You know what I mean? Like, we do our best. All right, so bear with me, guys. I am going to pause the music for just a second. Speaking of music, and again, we're watching the S&P. The question is, does the S&P 500 pull back a little bit now? Again, I'm not really sure. Um, we'll see if it does. But again, the question is, does the FOMC or not does the SPY pull back a little bit? We pushed up a lot over the last like 15, 20 minutes. We're over the 200 EMA now. So again, we'll see if that actually holds. But it's been a pretty big upward move so far over the last 20 minutes. I should have held that long position I took. All right, so we got a little bitty dip here. Tesla pulling back to the 200 EMA. Um, all right, so we did pop right back up. So we had that little baby dip, and now we're all the way back up to 454 on the SPY, which is a pretty big it's a pretty big thing here. This is a pretty big run over the last 20 minutes. It's a little bit too high up there for me to necessarily want to buy anything now. And again, we do have some big upward movement. Again, it's a little too extended. I'm going to prefer to wait for a pullback. So again, I'm going to wait for a pullback here. It's still popping up a little bit. Again, you can kind of see the SPY at 454s. We didn't really have any economic data. We had some earnings that dropped, and most of the earnings came out okay. But yeah, so far right now, market's just up a little bit too much for me to buy it. I'll wait for a pullback. We're still kind of in that same trend that I showed you guys earlier. All right, so you can also see Tesla still dipping down here. So look, Tesla down at 266. All right, so we're watching 266. Snapchat, speaking of Snapchat, is bouncing at the volume weighted average price. Let me see if I can put this up on the screen. All right, so there's the VWAP. I like it when I like it when the 200 EMA and the volume weighted average price is close enough. The reason I like the 200 EMA, people ask me all the time why I like the 200 EMA specifically for day trading. The reason I like it is because moving averages have so many variations, like the 9, the 12, the 20, the 24, the 26, the crossover, all that stuff. Um, but with the 200 EMA, it's just a long-term moving average. And so stocks and other things tend to respect it a lot more than like short-term moving averages. And so when we get dips and pullbacks to it, for instance, a lot of the time those dips and pullbacks can be a little bit more profound and useful regarding it. Like here's a good example of it where, if you look at, let me fix this now. Here's another example of it where if you look at this here, when the stock was holding, it bounced really nicely off of that here. And then when it finally broke underneath this, you can kind of see it. When it finally broke underneath it, it rejected at the 200 EMA and continued down. And so it's kind of like a milestone level that other traders watch. And because of that, I want to pay attention to it as well. Again, you can kind of see it keeps rejecting. When it finally broke over it, it actually held support there and continued. And again, I like a lot of the time when both of these levels seem to kind of sit right around the same spot. Like for instance, if we get a pullback here, I'm going to be a little bit more confident in that dip because, again, we have both the volume weighted average price and you got some traders trading the VWAP here. And then you got the 200 EMA right around the same spot. And so if we dip, I think a bounce like this is a lot more likely. But who knows? I certainly don't know for sure what this is going to do. I hope we get a bounce and we get some good plays. But again, my goal today is to build up a cushion and we'll see if we do. Let me know what you guys think. What's your favorite moving average? Um, I know I used to use like the 2024 level, but I like the 200 EMA now. The volume weighted average price, we got a lot of good content there. All right. All right. So again, Spy up there to 454s. People ask me why I call Jerome Powell Big Papa. Have y'all ever seen Stranger Things? He looks just like Papa from Stranger Things, you know? And so he's Big Papa. People got mad. A few people got mad when I say it, but that's all good. Favorite is relative to time. The 200 follows the VWAP closely. Yeah, that's kind of why I use it. I like to use like a mix of it, you know. Next week's a crazy week, though. Honestly, we got so much stuff going on next week. All right, so yeah, and then Jerome Powell said we're probably going to raise rates at least 2 times more. Uh, let's see if we got. All right, so yeah, so federal Jerome Powell said at least 2 interest rate increases are likely necessary this year to bring inflation back down to the central bank's 2% goal. We'll see if he does or not, but market's still flying up here. Look at the SPY, still up there at 454.30 or so, still making moves. So still making pretty big moves here. And again, we'll see if we get some nice continuation of this bullish action after the opening bell. And yeah, here's a question as well. When do you think we're going to hit the 2% goal the Fed gives us? Again, I know he said either next year or the year after. It could be the year after. But again, we're probably going to raise rates at least 2 more times this year. And then we also have the personal consumption expenditure. So yeah, we also have the PCE coming out. Let me see. Another small little pullback. Sorry, I'm kind of sitting over here hanging out, but 26, 2026, 25 maybe. I don't know. 26 just seems like so long. So quiet without the music. Yeah, I'm kind of over here working. But yeah. Um Again, the personal consumption expenditure is actually the Fed's preferred inflationary gauge. And so that'll be interesting to watch. Next week, we have both GDP and the PCE index. So that'll be big for like inflation and what that means moving forward. Um, and again, I'm not sure what we're going to get there, but I know that's pretty big on. Got a little dip here. Let's see if we hold at 454. All right, so let me delete that. and then almost got this done. Hmm. All right, so Tesla bouncing back over the 200 EMA. And again, core PCE is expected to show up at zero point 0.3 yesterday. So 0.3% is what core is expected to show. Let me look at Market Watch to see what they're showing. And Market Watch, again, core PCE data is expected to show at 0.3%, 0.3%. And then we also have GDP expected to show up at 2%, I think, next week. 2%, right, for PCE. Or 2% for GDP data, I'm sorry. So GDP is expected to show at 2% uh, next week. So PCE is expected at 2%. And again, I don't know if we're going to hit that or not, but hopefully we do. Again, to put it into perspective, PCE is related to inflation. PCE is related to inflation and GDP is related to recession fears, right? So they're both kind of, and the market has feared both at some points this year. So it's not like we've been really consistently fearing inflation. And during the bank failures that we had earlier in this year, the market was actually more so fearing a recession, and because of bank failures. And again, they blamed the bank failures on the rate hikes that we've had a lot lately over the next few cycles. So again, I think that is what really influenced the Fed to start skipping or whatever. But again, it's really a slippery slope. We don't know whether, again, let me know if you think we should keep raising rates. It's very likely that the Fed raises rates next Wednesday. Um, hmm. And again, we're almost done with this. And again, we're going to get into some trades pretty soon too. So we are going to get into some trades here. Again, 0.3% for the personal consumption expenditure. Again, CPI is probably the biggest reaction, though. Like last week, we had CPI. But CPI is like the biggest, most watched one. PCE is a little bit different. It's the Fed's preferred inflationary gauge. So it's what the Fed likes using during, to influence their decisions on whether they want to raise rates or not. Mm, yeah, let me see. All right, we got a dip. Tesla over the 200 EMA. So Tesla over the 200 EMA now. Hmm. All right, so is it time to buy this dip right now? I'm not sure. I do see. Yeah, GDP 2% expectations here. And a lot of people are telling us that we're going to hit a recession this year. So GDP coming at 2%. Again, let me know if you think that is going to spark more fears or less fears about a recession at this 2% level. Yeah, let me see if we get, there we go. Yeah, so next week we got a lot of stuff going on aside from the rate hike decision. On Wednesday, we have the rate hike decision. Uh, we have Thursday GDP and durable good orders as well as jobless claims. So we have the rate hike decision next Wednesday. Thursday, we have jobless claims, GDP data, pending home sales, retail inventories. And then Friday, we have the personal consumption expenditure. And GDP data is how many people are filing for unemployment. So that's a relevant mix of data as well. But a lot of stuff going on next week. And that's not even including the big earnings that drop with like next week. I think we have Microsoft, Snapchat, Google, McDonald's, Ford, just so many big earnings reports coming out next week as well. So the next week is the most volatile week of the month. And so y'all be ready for that. Again, today's Friday. We're going to see if we have some good volatility today. And we're really close to actually getting funded also. But again, we're less than $900 in net profit away from getting funded. And we'll see if we actually hit it, which we hopefully do. Tesla's still consolidating around the 200 EMA. Yeah, and I'm about to put the music back on as well, guys. So bear with me here. We are about to put the music back on, and hopefully that'll help me be less quiet. Again, we're just kind of working. So, all right. So let's see if we bounce after this dip. Spy just ripped up though. I'm not sure what I want to do here. Let me catch back up on the chat. Tesla 400 years ago compared to Tesla 400 today is totally different. Google, Pfizer, AI big boys. I don't know, man. A couple more times. We need to stop with the rate hikes. All right, so the SPY back up to 454, 223s. All right, guys, music's about to be on right now. All right, so we're about to get the music back on. All right. Will the market in green today? Did I do a poll today? All right, that should be good. Save. All right, guys, we're gonna put the music back up here now that we're finally done. There you go. All right, let me catch back up the chat. Is Netflix bearish? I don't know whether I'd consider Netflix bearish or not. I really don't know. Again, Netflix just had a really big year though. Like that's the only risk I think in Netflix. It's just up so much. It's up a lot, you know. And so anytime anything's up that big, I'm a little bit apprehensive to really get super heavy long on the year, just because I prefer to wait for dips and pullbacks. But again, that mentality is a little bit different for everybody, and you know, y'all can let me know what you guys think there. Again, I don't know what you should do, but Netflix has just had such a crazy big year. And again, I like buying the dip in Netflix. I think Netflix is going to be a fine long-term company, but like short-term, I'm not sure. All right. Yeah, and I know we're starting the stream a little bit later, but look at the SPY pop all the way back up to the previous highs here, man. The SPY ripping all the way back up to the previous highs. Again, I should have bought the dip, the crackdown on sharing passwords. Yeah, I talked about it before. I don't know if announcing that is even the right move. If I'm Netflix, I'm just going to implement that. Like, hey, we're not going to let people steal passwords anymore. That should be self-evident. Or share passwords anymore. Don't even announce it. Make no announcement. Just change it. People will figure it out. You're going to get less press and less negative press, at least. By just kind of doing it instead of announcing it like they have been. And they announced this a while back, and again, they got a pretty negative reaction from it. SPY's still popping up a little bit. If we look at Netflix here, Tesla's had a rough rough day. Netflix has had a rough day, but on a 5-day chart, after their earnings, they dropped pretty big. I'm not sure if they're cheap enough to buy it up yet. They're at 436s. Look at the S&P rip, though. All right, team. Let's see what else we got. Here we go. Sorry, I'm trying to find music. There we go. And again, are you guys red or green this week? It's Friday. Let me know if you guys are red. We ain't got no job. It's Friday. Let me know if you guys are red or green on this week so far. There we go. Did the Carvana squeeze ended? I mean, we're still looking at Carvana here. It's Carvana right here. Again, it's got a chance to do anything. It's actually pretty flat right now, so it's not really like a huge, it's not really a huge pullback yet. So we still have time. And again, whether it's going to make another squeeze, I'm not sure. Let me know what you guys think. Did I do a poll today? Let me check. No, I didn't. Carvana break over 50 today. Yes or no? Does Carvana break over 50 today? Let me know. CEI is up, man. I was up big on the week. I had to take care of things yesterday. Now the computer came home. Oh, man. Rough to hear. Green with Charles Schwab. Yeah, I know Schwab flew up. All right, so this should be good. Almost done with all right, that should be good. Let's go ahead and export this thing. Music back up. Greenest July in the past 3 years. Yeah, the market's been great too, to be honest here. Let me know if you guys see any good trades to get involved with. I see the NASDAQ, but it's up so much short term that I'm a little skeptical here. Like, I'm also kind of switching to maybe a short biased view short term on something like the E-mini, just because it's breaking so many highs that I think there's a chance that we get a little correction dip. But maybe I'm wrong. I really don't know. Yeah, we have pulled back a little bit. I am seeing Carvana try to bounce some. Green here, sold before Tesla earnings. Nice. Yeah, then you're probably okay. I was thinking the same on the E-mini. Yeah, I mean, again, I'm not gonna. I don't like shorting things that are super high up there, but I think like a correction pullback, small at least, is possible. Again, here's the latest run. I think we could dip down a little bit, but again, who knows? I'm not going to take any like super crazy big positions because again, we could just keep ripping back up. And again, the goal is to build up a cushion today. So if we can't do that, that's okay. The goal is not to lose over $300 today. You know, if we don't lose over $300 today, we're setting ourselves up to have a pretty good week next week. So. Again, we're slightly green on the day as well right now, slightly green. All right, market pulling back. We'll see if we get that pullback that we were looking for. All right, market's kind of dipping down a little bit, but we're honestly in a range. All right, there goes that. All right, so the market just tapped over highs for a split second too. Question is, how long does this strength last here? So like, here's the SPY pushing up. Again, how long does this strength last? I'm not sure. Could have Amex earnings drop today too. Market just ripped back up here, guys. Huge pop. We'll see if it continues. Does the market continue to bounce? Let's watch Tesla, watch Netflix, see if everything's primed for it. All right, market's retracing a little bit after a big run. All right, so we're pretty much flat on the day on our trades too. Should have held Rivian. What's Rivian doing? DraftKings looks good. It's been so long since I looked at DraftKings. You can kind of see this trend we drew on the E-mini, and we're going to get ready to trade. Let me make sure I'm in the right account. Yeah, you can kind of see this trend we drew on the E-mini right here. And we did hold that trend. So you can kind of see that crazy big trend. Yeah, we're gonna wait for some good trades to get involved with today, but we're just trying to be patient. Again, I don't have to make money today. Today's one of those days where like the market, in all honesty, is kind of flat. Or the market a lot of the time is flat. I mean, on Fridays. So like with that flatness, I just don't know if it's something that I want to push super heavily into today because of how, for lack of a better word, risky Fridays are. I guess it's for lack of a better word. Fridays are typically very risky, and I just don't know if I want to get stuck in crazy negative, like risky stuff. You know what I mean? So we're going to try to build up a cushion today of $200 or $300 in futures. Again, you can kind of see my progress on this account. Today we're slightly red. We took a little trade. We are down about $24, but that's nothing. If you look at this month on this account, we're doing really well. We are only about $900 away from getting funded here. You can see we are up about $2,800 gross. So doing really nice, But again, I do not want to give all this back trading dumb on a Friday. So with that, again, the goal today is to build up a small cushion. If we can build up a small cushion, then we will take larger risks. If we can build up a cushion of $100 to $200, then we'll trade a little bit larger. If we build up even larger cushion, then we'll go for the full hit 900 profit. You know, if we're anywhere close to that, we might just wait and then try to get one last green day on Friday. But again, here is our monthly graph. And again, you can see this is our profit graph pulled directly from the platform. We'll see if we hit some stuff. Market's still in a very tight but upward trend here. I would say, like, if you look at this trend currently, you can kind of see it here. You can kind of see the very tight neutral trend. It might be a little bit tighter than this, actually. Like, you probably do like this and see like a very tight neutral trend. Or not neutral trend, I'm sorry, upward trend. And you can kind of, you know, look at it there. So again, we'll see if we keep following that trend. Look at Tesla pop. Guys, Tesla up to 266 right now. 266. Yeah, for me, there's a little bit too much risk going long for this, to be honest. A little bit too much risk there, I think. All right, guys. My opinion only. Nvidia moneymaker. Where's Nvidia at right now? I mean, I know like I am green in our Nvidia trade overall short. I'm in SOXS short. And I've been in that short for like a month now, and it looks like it's doing nice today. Or no, it's doing worse today because I think Nvidia is up. But again, you can kind of see that same trend that we drew on the E-mini. Nvidia is back up to 460s. But it is Friday, guys. So again, typically we get lower volatility today. We'll see. All right, so we are following that trend. Look at Tesla rip. Is this a catalyst for Tesla? It seems to be one. Let's see if there is. Tesla, Kathy Woods, ARK Invest, autonomous tech ETF sold nearly 20% of its stake in GM while boosting its Taiwan semi holding. All right, 20 minutes, guys, 20 minutes. Again, big options expiration day too. Yeah, for sure. It's a big day overall. Look at the trend I drew here on the E-mini did work really nicely here. And again, with the rest of the profit on this account, it's going to be purely trend identification and building. I'm not going to take any counter trend trades. At least I'm going to do my best not to, unless there's just like a huge obvious extension in something. That's the only thing. Q is ripping. Yeah, it's probably because Tesla. But yeah, basically Kathy Woods, ARK Invest, putting some more money behind microchips. All right, so again, we are pulling back someone Carvana today, but we are about to back up to 46.35s. I did a poll asking people if we thought Carvana would hit $50 today. 53% think no, 47% think yes. I got it, again the E-mini up at basically 5,600. NVIDIA has good support at 450 and resistance at 480. Yeah, NVIDIA back up to 460 right now. Again, I'm skeptical in buying NVIDIA short term, though. I think there's just a lot of risk there. All right, guys, we got about 15 minutes left. 15 minutes. All right, so we are still in that same trend we drew. All right, so again, we're back down to the bottom of that trend line here. We'll see if it holds. NVIDIA is still sitting at 460. All right, so back down. We're breaking down under that bottom trend. Tesla at 266, starting to bounce up a little bit here, and the market opens in 15 minutes. Again, let me know if you guys think I will hit the combine goals today. We're close. All right, so Tesla up to 267s here, 267s. Gold is falling. I saw gold dipping down a little bit today, and I'm in gold, to be honest. But gold has had a pretty nice little run up. It hit 184s yesterday morning, and so gold's actually had a pretty big rise up. Yeah, she's not a good trader, but she's a good investor, Paulo, I would say. But I mean, to be honest, I don't think it's really hard to be a good investor as of late. I think most stuff's going up, you know. All right. We do have a video debuting today after the stream, much later on, once the stream ends. Got it. Who traded Siri yesterday? I've had a couple people mention Siri. Is this serious? Oh, dude. I mean, I don't like this stock at all. It did have a huge gap up, though. But again, obviously, I think they're becoming obsolete because the radio is becoming obsolete and they're going to lose business over time. But maybe I'm wrong. I'm not sure. Uh, Dogecoin is flying. Yeah, I think Elon said something about Doge yesterday. I think I noticed it on Twitter. I think he said something. Look at Carvana bounce back up, almost up over 46.50 now, slightly over 46.50. Yeah, well, tech's done really well, to be honest. Mm. All right, guys. So you guys ready? So yeah, so we are breaking that bottom trend. July 26th is when this next upcoming rate hike decision. Expectations for this are for 25 basis point rate hike. And remember, last time they paused. So again, the rate hike is very expected. So again, Siri is up. What's the news on Siri? I got a couple I got a couple people mentioning this in chat today. Let's see what the Siri news is. Again, a lot of people are saying, hold on, Siri. All right, so Sirius loading. Multiple firms downgraded their rating on the stock following yesterday's rally. Deutsche downgraded them. What? So this is earnings, maybe. Let me see. Why is Siri up so much? Hurt a halted circuit breaker. Okay, so people are saying it's a short squeeze. Liberty Media arbitrage backfires. All right, so they said an apparent short squeeze in Sirius, which is the highest ratio of short interest in its publicly available float among companies in the Russell, appear to be driving up the stock price. But again, like what I don't understand is what is the habit with retail and base investors in driving up the prices of very bad looking companies? Like Siri, it's a radio stock when radio's dying. That's just an obvious thing. Radio is obviously dying. So why invest money into that? No offense. Like, what's the purpose of investing money into Sirius? Again, it's a very obvious outcome. And again, I guess they said the same thing with GameStop. But again, I think to a certain extent, they're right on GameStop as well. Like the physical video game business model is dwindling over the last 10 years. Like physical copies of video games are getting purchased less and less. And so in that regard, GameStop's risky as well, in all honesty. But I like GameStop, but it's risky, of course, because if they don't change their business model, they're done. I think the same thing can be said with Siri here, because again, it's a radio stock as radio becomes less and less relevant. But again, maybe I'm wrong. Let me know what you guys think. It did squeeze up to 717s and it's sitting up big today. But again, I don't know. I don't know what the goal is here, but again, Powell next week will be big. Again, our goal is to hit $900 in profit. If we can hit $900 in profit, guys, we are basically going to be funded today, and that's the goal. Hopefully, we'll hit it. We're pretty close, man. I'm excited to. Again, I told you guys a couple weeks ago that I would be funded within the next few weeks, and so I wasn't lying. Again, my Toss account's got 30 plus thousand, over 30K in it. My Moomoo account's got almost 30K in it as well. And so when it comes to funding, again, I don't necessarily need to get funded, but Topstep is great if you don't have as much money as I do, to be honest, because again, it's a low barrier of entry. They give you a demo, they test your skill. If you can hit the target on their demo, which they give you a 50K one for the base one, is $49. But if you can hit the target on their demo while following their rules, they fund you 50K with a 90% split, and you get to keep your first $10,000 in profit. Now, when you compare that to the risk, where like once you're funded, you get to keep your first 10K and it's 90% after that of profit. If you compare that to the risk of $49 for the base combine, it's a pretty obvious thing, which has limited risk, but your reward is pretty much the same at 90%. I think that's an obvious choice. And I think when you consider the fact that most day traders lose, and I think most people are going to lose these as well because most day traders lose, I think this is an obvious way if you're trying to learn day trading, or maybe even if you're good enough at day trading but you don't have the equity to make money with it, this is an obvious choice where it's the best of both worlds. If you lose, not the end of the world, $49. If you pass it, you still get a lot of the reward. And so in that regard, it makes perfect sense. And there's no PDT in futures. You can day trade the S&P 500, you can day trade the NASDAQ and what's called the E-mini and the NASDAQ, and you can also day trade currencies, gold, silver. And the patterns on the S&P are very similar to the patterns in something like Apple or Tesla, because those are all heavily weighted stocks. And so it's very similar to day trading stocks. You just day trading the S&P 500 instead. And so it makes perfect sense, I think, there. And it's something that a lot of traders should be, most pro traders trade futures, to be honest. But if you want to check them out, here is the link. The $400 call September. Yeah, the GDP, a lot of people I see do serious, especially in rental cars. Yeah, I mean, I don't know. Again, y'all can sell me on Siri. It's just not really my style of trade. But it's all good. I'm not hating on you if you buy it. It's just not really what I'm trying to do. Yeah, I'm going to go ahead and ban Shane. He just kind of sits around, waits for me to do sponsored plugs, and then complains about it. What a life, man. Hey, way to live. But hey, choose how you want to live. 5 minutes, guys. 5 minutes. Yeah, I mean, I don't know. I don't have Siri. I don't actually use them. So I don't know how good or bad they are. I wonder if satellite radio is big where there aren't internet. Maybe. I'm not in options on Tesla at all. I'm holding shares. Supreme. You know what I mean? So I'm holding shares. Again, rate hike decision. Let me know what you guys think they're going to do. Chair Powell. All right. All right, so we're starting to break down under that trend. We got about 2 minutes left, 2 minutes. Still breaking down a little bit. Is there any argument in buying this dip today? Let me know. Is there an argument in buying the dip? I'm not sure. Right now, there could be a dip buy, but again, I think I'm just going to wait until the opening bell and try to get some better, more favorable trades in there. All right, we got 1 minute left, guys. 1 minute left. Carvana has been on a nice little run, although the S&P 500 has been dipping down some. So Carvana has been running while the S&P dips. Again, I'm not ready to buy the dip yet. I'm just going to sit tight and wait. I do see some. Actually, I'm going to take one contract short based off of a trade. We're pretty flat on the day, but I'm going to take one contract short. There's me again. Hey, I'm not going to do anything. I'm just going to wait. Oh, never mind. I'm going to take a trade. Maybe I should have taken a micro trade, honestly, but it's all good. I can make fun of myself. We'll give it a little bit of time. Again, the goal is to find some good trades. I do want to, I did realize that we have, all right, so we just made $40 and we are now effectively flat on the day. And here's the market open right now. All right, so there's the opening bell here. I'm going to watch everything else to see if we get some good stuff. SPY trying to break down ahead of the opening bell here. All right, so retracing back a little bit at the opening bell for the E-mini. Still breaking down a little bit. You see Carvana dipping, Tesla dipping since the opening bell. Shout out to everybody that said no when I shorted, This is why I tell people not to pressure anybody to take a direction, because this is kind of what happens. All right, still breaking down here, just cracked under lows. Will the market bounce back? Is it time for a buy? I don't know. I'm not going to do it yet. All right, so bouncing up a little bit. Bounce it up a little bit. Should I short here? Again, I think I'm just gonna wait. Again, patience, guys. This is again. I need about $900 today, and I'll get funded. But I think I have to be patient for sure. Let me know what you guys think here. I don't know what to do. I'm just kind of sitting back, waiting for some better action to show up. I think I could short here, but look at Tesla just dumped down since the opening bell. That's a big drop. Bounce it back some. Should I short right now? I don't know. I'm going to wait for a trend to show up. We had one greed trade right before the opening bell, and we are just kind of sitting tight. Part of me wants to short. I'm going to go in short now. Again, we're pretty flat on the day so far. We haven't really taken too many big trades. Oh, that ain't good. Tesla's starting to test these lows. The only reason I'm staying in this trade is because I think if Tesla cracks this low, it could drag this right back down. All right, so we are in 2 contracts now. All right, just took half off there. Just took another half off. So now we are green slightly on the day. Slight green day so far. Managed that trade so we didn't take a big loss. Could have held it a little bit longer. But again, maybe I'm a little nervous. People wonder why I'm trading. I am bouncing back up. I might short this again, but Tesla's bouncing back up a little bit too. I think I'm going to wait a second. All right, so we're short again. We'll see if this helps or hurts us. We're slightly green right now, slightly green. I'd love a big dip. So I could, again, goal is to build up a cushion right now. And I think this looks good for a cushion, but again, we got to watch Tesla. Tesla's pretty heavily weighted. We're flat right now. I want to give it time to reject and break down. That doesn't look good. Okay, wait, that's better. All right, now we're green. Look at Carvana start to dip. Very close to cutting this. If we move up anymore, I'm cutting it. Consolidating. Tesla pulling back some. That could help the trade. Again, we're still pretty flat on the day. I'd love to give it time to reject here, though. I like the big upwick. The big upwick is usually telling of selling pressure, but you never know what's going to ultimately happen here. Carvana's starting to dump down. Tesla's starting to move back down to crack the lows a little bit. All right, so flat. There we go. I like this breakdown. I didn't get as much as I wanted out of that, but we're still up 25, 30 bucks on the day. That's better than nothing. Didn't get as much as I wanted out of it, though. But we got a small green trade, small cushion on the day. That's better than nothing, like I said. Could have held it a little bit more. Again, it's Friday, and I'm worried about giving back some gains. Should have held that, but that's all right. I'm going to short this again, too. I think there's a chance that we have a rejection. So I'm short again on the FOMC, or on the... All right, so we just made about $60 there. All right, so we got the first half of our cushion on the day. We are currently up about $75 on that quick little scalp. I'm watching Tesla break down pretty fast here. So we are watching Tesla dump. Again, the goal is to build up a small cushion first, which we now effectively have. Depends on if we can capitalize on some weakness now today. That's a big old bear flag, yeah, for sure. All right, so we're consolidating a little bit. Still, again, I'm not pushing too many buttons right now, to be honest. Back up to the bottom of the range here. And part of me wants to short, but I also don't really quite trust this a ton. But I'll go ahead and take the risk since I already have a cushion on the day and see if we move a little bit farther down to test the true bottom of this range. I might also go with 2 contracts now since I do have that cushion on the day if I want to fix my average at all a little bit while I'm in the trade. But maybe not. Maybe I'll just stick to 1. There's Tesla breaking down again. Currently flat. I wanted to see if we retrace back to the bottom and then get like a momentum breakdown, if that makes sense. All right, so flat now. I'm going to fix my average a little bit. There's 2 contracts. Ideally, I'd like to see like a flush breakdown really quick that I could take profit into. There we go. All right, just took half off there, riding the rest of the breakdown there. All right, done. All right, so now we have effectively built up maybe 3/4 of the position of cushion. Now we have about $130 in profit. And now we can start to take maybe a little bit larger risks. I don't know if I should. I'll probably keep trading 1 or 2 contracts until until we actually get a couple hundred at least. And I know I'm probably trading a little bit, not scared. Maybe that's not the best word. Maybe apprehensive is a better word for this. But I want to, again, I need about $900, maybe a little bit less than that in profit today. But I don't want to give it back because it is Friday and I'm a little bit more careful on Fridays, I think. But man, I could have held it and got it right there. There's the big breakdown. But again, we're not going to catch every move and it's okay. We're still, if you look at our profit, we're still running about 2.5 to 1 in terms of like win to loss ratio, about 2.5 to 1. So we're still doing all right. All right, so we broke down and then we retraced pretty quickly here. All right, so there's the breakdown again. So I guess we did hold that. Yeah, my dog's barking a little bit. It's okay. Yeah, Carvana looking weak too. Tesla's starting to rebound back up though, so I'll probably stop my shorts right now. I think we've broken down enough, and I think the likelihood of like a bounce back is going to grow currently. So Nasdaq's bouncing back a little bit too. Now we don't quite have it on the E-mini yet, but it's starting to bounce some. Yeah, Nasdaq starting to come back a little bit. It depends on what Tesla does here. If this bear flag holds for Tesla, it might work. But again, I'm trying to trade with the trend, and right now the trend is down. So I would buy it here and try to ride back a bounce back, which I think is pretty likely. But again, one of my rules here is to trade with the trend. So that's what we're going to do. All right, so we just cracked under lows again, but you can kind of see, like, we do have this downward trend. It is a big old bear flag, like Pawn said, and we are kind of breaking down some more. Yeah, it looks like it was a good move. I didn't buy that dip, man. Yeah, what's the Russell symbol? I don't really trade that too much. I don't know. My wife's taking the dog out. The reason he was barking is because Bruce, he just gets so excited, man. He just gets so excited to eat. Like when he eats, Bruce, he's like, you ever seen a little dog spin around in circles when they get excited? Well, Bruce is this big German Shepherd. But when he's ready to eat and he knows we're going to fix him his food, he will spin around over and over again. He just gets so excited for it. Look, the market's still breaking down a little bit, and this is why I said I'm going to trade with the trend. I'm not going to try to predict some reversal. I'm just going to trade with the trend. IWM is the symbol. Futures, so it's IWMU3 right now. What about in futures? What's the futures contract of the Russell? They have it. Market's flushing. Again, glad I didn't buy this dip, man. And again, I want to show you guys chart prime because you can see how accurate chart prime is. Again, if you're going to complain about plugs, we do a plug about every 30 minutes, 45 minutes. I think with a 4-hour stream, a plug every 30 or 45 minutes is very reasonable. One of my sponsors is a company called Chart Prime. They give you trading view signals and alerts. Again, I can't guarantee you're going to make money with them. Nobody can. But again, you can kind of see how useful they are. Again, they give you, you can use them on stocks, crypto, Forex, futures, basically anything on trading view. And when you look at these here, again, it's $35 a month. This is their Market Oracle Pro. I just want to show you, like, look, this is today. Strong buy signal here. Look at the huge bounces you get over the next like 40 minutes. Strong sell signal here, or sell signal here. Look at the huge drops you get. Even here, sell signal here, buy signal here, bounce. Strong sell signal here, drop. And again, you can continuously see the strong buy signal here, bounce. Strong sell signal here, drop. And there's so much more that they offer. If you look at like their chart patterns, you can look at like different flag patterns. If I put up like a 5-minute chart here, it'll show me longer term chart patterns, reversals. It'll show me triangles, flags, wedges. Like look at this wedge here, the triangle. You can see when it broke out, it worked really nicely. It'll show you candlestick patterns and momentum. And this, again, just a small piece. They also have their own oscillator here. They have smart money concepts. You can look at market dynamics. There's just so much stuff that they give you for very cheap, and you can kind of see how accurate this stuff is. But $35 a month. The edge that it gives you, in my opinion, is really profound. But again, they are a sponsor of mine. I'm certainly biased because they pay me money. But if you want to check them out, again, great way to help support the channel. Here's the link. Market's breaking down. Again, I'm going to try to build up that cushion today. Dump it Fridays. What do you mean too much sub? What? Disney breaking lows? Yeah, I mean, I ended up taking profit on Disney at like the last one was at like 91s. My average on Disney currently is 85.80s. So again, the last time Disney dipped really heavily, we bought it. And again, if you don't believe me here, let me show you. Here is my average price on Disney. It is 85.80s. So yeah, we're still green on our Disney trade, to be honest. And again, the last time Disney pushed up to 91s or 92s, we took some profit and then added again on the bounce or on the drop. And so we're still sitting okay in Disney. It's just a longer term trade. We've already scaled out of most of it as well. This is a small position. Coin just broke under 100. Did it really? It did. So Coinbase under $100 now. The whole market's starting to drop. It dropped yesterday too. Who needs to cut back on subs? You have too many subs, or are you saying I plug too many subscriptions? You know, again, we only have 2 sponsors, 3 sponsors. You know, we might do, like I said, we might do 4 plugs a day, 5 plugs a day for a 4-hour stream. You know, a little bit less than a plug every hour. I don't think that's unreasonable. Radio gives you what? A commercial every 25 minutes? Oh, I have too many. Okay, gotcha. Yeah, I didn't know if you were. Okay, gotcha. Appreciate the clarification. Coinbase bouncing back up though. It's right under 100. Let's see if $100 rejects it. It's bouncing up. It's at 99.60 right now for Coinbase. Kathy Woods didn't sell the bottom now. End times are here. Hey, maybe. Again, we're so weak right now. I'm skeptical of this, to be honest. All right, we just had so much red action. I like betting on the trend, but I think this trend is a little bit too extended on the downside. Do you guys think this red trend will continue today, guys? Let me know. Bloomberg is every 5 minutes. CNBC's, yeah, that's kind of how it goes. This gentleman gives gold away for free. Thank you. Hey, thank you, man. I appreciate you. Yeah, we're gonna plug stuff. I mean, it's all good. Hey, thanks, Green. No, I do not. Most likely a pump at the end of day today. I hope so, Shepard. Again, we're just looking to trade. And again, I can't really trade whenever we just get constant breakdowns. It's just a little bit too down on the day here. Are you trading according to that indicator you've just shown? I have been a lot. I'm not trading purely off of that indicator, but again, here is my stats. Here's my stats today. And then if you look at the this month, so we can look at July. I'm trying to get funded on this combine. And so we are about, I mean, again, in gross profit, we've we're only $100 away from 3K. In net profit, we're probably sitting currently at about $2,300. So we need about $700 in gains. But a lot of these have been using Chart Prime, to be honest. Not all of them. I don't base my trades purely off of Chart Prime, but I do use it some. And I think it's really solid. But again, I'm biased, of course. They're a sponsor of mine. I'll tell you the ones I use the most on Chart Prime are I use the Market Oracle and the Market Oracle Pro the most. Right? I think those are incredibly powerful. And again, if you just use those with like basic candlestick patterns, you can get a lot of good edge. Like a great example of that is the last one right here. Like, look at the NASDAQ on a 5-minute chart. It put the sell signal in here, and we've got pretty consistent drops over the last 20 minutes afterwards. It comes in after the candle forms. Dollar spiked. Yeah, well, the dollar is generally going to go up as the market goes down. And again, if you haven't already, check out Topstep. Check out Moo if you haven't already checked that one out as well. We do have a video debuting after the stream today. If for whatever reason it doesn't redirect you to the video, we're going to be breaking down all the big news stories that go on next week in this video. Here's the link to it. It debuts in 4 minutes. So you can check out the link right there. Again, you won't have to go anywhere. As soon as we close this stream, it should immediately pivot you over to that one. So right now on Topstep, I'm trading what's called the E-mini, which is the S&P 500 or the NASDAQ. And I'm just using, this is Quant Tower as a platform. Topstep's the funded account program for futures where they give you a demo, they test your skill. If you can hit the target while following their rules, they fund you between 50 to 150K with a 90% split, and you get to keep your first 10K. That's the funded, and they're the most legit one in the world. They pay out millions and fund thousands a year. They pay out millions in actual withdrawals, that is. Chart Prime is the indicator service. Moo is the brokerage. Those are my 3 sponsors. y'all have a safe weekend, though, guys. Okay, y'all have a safe weekend. Again, we will be back Monday. Crazy week next week. Incredibly busy Monday for sure. Just super busy. Just got a lot of different things going on. And so, yeah, y'all be ready for that. We'll see if we get a little bounce. Again, so far right now, if you want to see where I'm at on the day, today we are up about 120. And so, again, my goal is to build up a cushion of $100 to $200 and then take larger risks once I have that cushion. That's probably still the goal today. Again, we'll see what happens. But I'm hoping that's what we get, you know. Carvana started to break down. Tesla does look to be at the bottom of the range here. And again, we got 1 minute, guys. 1 minute. Yeah, you can. You can do a paper trading trial on there, Kenny, to get used to the platform. I'm pretty sure. Yeah, you can. Any combine comes with a paper trading like option. Like I can put up a paper option right here, if I want. And again, it is paper. Like I can pull this up. If you see this right here, here's P, which stands for paper account, and it'll tell you which one. But yeah, any combine comes with that. All right, guys, and again, y'all have a safe weekend. Have a happy Friday, and y'all be good this weekend. I'll see you guys next week. Again, the video is about to debut right now, and again, as soon as we close this stream, as soon as we end this stream, it's going to redirect you to our upcoming video that's about the rate hike decision. It's about the rate hike decision, earnings coming out, and all that good stuff. And that video is about to debut. But again, that video is about to start right now. Y'all be safe. Y'all be good. Love you all. Y'all have fun this weekend. And again, I'm going to go ahead and end this stream right now. I'll see you guys. You get 40% off at checkout, Lenart, but it's at checkout. So you'll see it at checkout if you go all the way to checkout. But yeah, I'll see you guys later. Y'all be good.